Welcome to the 31st installment in Trading Strategy Guide's Trading Education Series. Today, we're going to talk about trading price action. Stick around. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of our Trading Education Series. Today, we're going to talk about the next element of technical analysis, how to read price action. Here we go. For several weeks now, we've been talking about technical analysis, using the charts to determine trends and find trade opportunities. To continue technical analysis, we're going to discuss price action. Price action can simply be defined as the candlesticks and the patterns they form. As I've said a few times, the market is moved by the interaction between the buyers and the sellers, and that's reflected in the price movement. So studying the price movement should become natural as you progress. As you learn to read price action, you'll gain insights into the short-term and long-term sentiment of the market and be able to determine who's in control, the buyers or the sellers. Once you know who's in control of the market, you can figure out how the market participants will likely respond to changes in the market. Price analysis is more than just watching for your favorite price action pattern. As we've discussed in earlier videos, you have to understand the supply and demand imbalances happening behind the price. This is an essential analysis that many traders miss, and if you want to become a pro trader, you need to consider it before you even look at the price action. So always keep in mind, price action analysis, like we're about to look at, can only work if it's used in conjunction with the trend and around support and resistance levels. Otherwise, you'll be trading on pure price randomness. In other words, you'll see these candlestick patterns all the time, but unless you put them in the right context, they are meaningless. A pin bar is a reversal price pattern that consists of only one price bar. Basically, a pin bar has a small candle body with a very long wick. You remember that I told you that a long candle wick represents price rejection. So in this bullish pin bar, you can see that at some point during the course of this candle, the price pushed way down, but was rejected, and the candle closed back up near the open. By the way, it doesn't really matter whether the open is above the close or below the close. The important point is that the long wick is at the bottom, showing us that buyers were in control. And of course, a bearish pin bar is just the opposite. The long wick is at the top, so it shows the sellers were in control. Also, you have to make sure that the candle is in the right context. A bullish pin bar should be located at the end of a bearish trend, and it signals a possible reversal of the prevailing trend and the start of a new bullish trend. And of course, a bearish pin bar should be located at the end of a bullish trend and signals a possible reversal of the prevailing trend and the start of a new bearish trend. The best trading opportunities are taken in the direction of the trends and are found at important support and resistance levels. So we want to trade within a smart framework, bringing together the market structure, the trend, the major support and resistance levels, and the price action pattern, in this case, the pin bar. In this example, the bearish pin bar provides clear evidence of price rejection at a resistance zone. In the context of the higher time frame bearish trend, this provides us with a lower risk and high probability trade in the short direction. A trade is only triggered at the break of the pin bar's price low. This is what gives confirmation that a pin bar is valid. Every single price action has a story behind its shape. A pin bar displays exhaustion of the prevailing trend. For example, a bearish pin bar shows that buyers are exhausted, or in other words, the demand is draining out and there are no more buyers left to push the market upwards. Consequently, we see the market rolling over. That's the reason a pin bar can be such a powerful price action if placed in the right framework. Remember, you should only be concerned with the current price action after you have identified the strength of the trend and the price action's location within the support and resistance framework. Another popular price action pattern is the bullish engulfing and bearish engulfing patterns. These are both two-candle reversal patterns. A bullish engulfing pattern should only occur at the bottom of a downtrend, while the bearish engulfing pattern should only occur at the top of an uptrend. Let's focus on the bullish engulfing pattern because the bearish engulfing pattern will be the same in reverse. The first candle of the bullish engulfing pattern is a bearish candlestick, continuing the trend in the downward direction. The second candle of the bullish engulfing pattern is a bullish candlestick that typically breaks the low of the prior bearish candlestick and closes above the body of that bearish candlestick. In other words, the green candle totally engulfs the real body of the red candle. The confirmation of the bullish engulfing pattern is a break above the high of the bullish candle. Let's take a look at the sentiment and the psychology of the bullish engulfing pattern. Who's in control, the buyers or the sellers? Take a look at the bullish engulfing pattern. The first candle continues the downtrend and everything is looking bearish at this point. The second candle ideally breaks below the low of the first candle, and placed in a support and resistance framework, we can say that the price is in an area that can show a change in the balance of buyers and sellers. At this point, the sellers are running out of fuel at these low prices, and maybe there will be some profit taking at the support level. At the same time, the buyers like this support level and enter the market in more force. At this stage, the supply and demand balance has tipped in favor of the buyers, and as the end result, the price rallied aggressively. Remember, the key to the bullish engulfing pattern is the closing of the green candle above the open of the red candle. Without getting too much into the structure of the price action, we can name a few more price action patterns like the inside bar, which is a two-candle continuation pattern. Because of the simplicity of the price structure, notice that the inside bar appears very frequently on the chart. The price structure of an inside bar pattern is defined by two candles where the second candle is completely contained within the price range of the first candle. The most important thing to remember is the price action needs to be used in conjunction with the market trends and the support and resistance zones if you want to increase the probability of your trades. A top-down approach to price action is working from the identification of the market structure, then down to the current trend within that structure, and only then we look at the current price through candlestick price patterns. Using price patterns like the pin bars and engulfing bars, you can determine the bearish or bullish sentiment and subsequently have an entry trigger mechanism that can help you manage your trades. What you need to be sure to understand is that it's wrong to blindly trade price action. You have to think about where the price action occurs within the current market structure, what's the dominant trend, and the location of support and resistance levels. And that covers this week's discussion of price action. Next week, we'll continue our discussion of technical analysis when we talk about indicators. For now, let's take a quick look at the Dream Trades. Dream Trades is a service from Trading Strategy Guides. As a quick overview, the Dream Trades app shows you selected stock issues that meet the Dream Trades criteria. The stocks are selected and ranked by their trade volume and other fundamentals, and also by the price with respect to the 50, 150, and 200-day simple moving averages. The trade suggestions are divided between bullish and bearish signals. Our active Dream Trades include Lumentum Holdings, or LITE, which pushed up to 110% of our entry price. I pulled the trailing stop up to 86.89, which was 105% level, which was then hit on Tuesday. So we got some nice profit on this, and we're done with LITE for now. Garmin Limited, GRMN, pushed almost up to the 120% level, but didn't quite make it. My trailing stop is currently at 110.91, which is the 10% profit level. And Belden Inc., BDC, is our object lesson for the day. This is the reason why I told you to stand aside until after the U.S. election was decided. Well, if you ask some people, they'd tell you it's still not decided, but I digress. Monday's price action was crazy since the projected winner of the election was announced over the weekend. And on Monday morning, Belden's price gapped way up to 36.81 and opened right there, which was above my stop loss. So that is where I got taken out. That represents a 16% loss, higher than the intended 10% loss on this. This happens sometimes, okay? Once in a while it goes the other way and we end up with a nice windfall profit, which I did on another dream trade that I had open. They balance each other out. I'm done with BDC for right now. As I've mentioned before, I'm recording this video on Tuesday afternoon and it's almost 3 p.m. New York time, so the market is getting close to closing. World Wrestling Entertainment Inc., or WWE, is looking like a pretty nice setup. And one thing I like about this is this pin bar right here, just like we talked about in this video earlier. And it's bouncing off the 150 and the 200 right here. Remember, we're looking for a daily candle close below the 50-day moving average right here. Taking the dream trades is relatively simple, but does require a bit of analysis. So just about 30 or so minutes before the market close, or about 3:30 New York time, take a look at the charts for all the calls in the Dream Trades app and find the ones that have been trending in the correct direction. Also, you'll want to see a nice spike in the volume on the breaking candle. For a sell, look for a candle close below the 50 SMA. Then your stop loss will be 110% of the entry price, and your first target will be 95% of the entry price. If the price starts going sideways, we'll close it and move on, which will allow us to use the equity on something that's actually making money. When the price hits our first target, we'll move our stop loss up to break even. Each time the stock moves 5% in our direction, we'll move our stop loss 5%, so it will always be 5 to 10% behind the current price. And that's our dream trade for this week. If you want more information about dream trades, just click the link below in the description box. Come back Friday for my strategy of the week and next Monday for my trade picks. And don't miss the next installment of the Trading Education series next Wednesday when we'll discuss indicators. My videos come out at 3 p.m. New York time on those days. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. Have a great hump day, and I'll see you on Friday.